is an infinitely hard asset, whereas gold can be produced by human beings given enough incentive. I realized that over the long term, Bitcoin is the harder asset than gold.
Bitcoin and gold. Why not gold, Michael?
I considered gold, and then I started studying the two, and then I realized that gold miners are going to produce about 2% more gold every year. And then I realized that there's a possibility over the next 100 years that more than 2% of gold will be increased. But let's just say in the best of the world, for 100 years, we produce 2% more gold. That means $100 million will be debased down to $12.5 million in 100 years. On the other hand, Bitcoin is exponentially going to infinity stock to flow. There's never going to be more than 21 million Bitcoin. So you're really talking about at most diluting $100 million of Bitcoin by 10 million over the 100 years. And given the fact that Bitcoin is an infinitely hard asset, whereas gold can be produced by human beings given enough incentive, I realized that over the long term, Bitcoin is the harder asset than gold.
Do you think we'll see a shift because we see central banks buying gold, right? And that was a signal, I would say, at the start of this year and last year when there was record buying from central banks. Could we see that happening with Bitcoin?
I think that Bitcoin is digital gold, and that means it's faster. I can move it 1,000 places in a couple of seconds. It's stronger. I can pledge $100 million of it for 3 hours in Japan on a Saturday afternoon, right? It's smarter. I can write a computer program that'll slice it in a million pieces and do complicated things with it. It's only going to get better every year forever because it's software. And what that means is people that are attracted to Apple and Amazon, Google, and Facebook, because they're smarter, faster, stronger networks, they're going to be attracted to Bitcoin. Logically, that means, by the way, central banks weren't buying Apple, Amazon, Facebook, and Google initially. It'll first be technology investors, then it will be super high net worth individuals, it'll be private companies, public companies, it'll be the institutions that bought Apple stock. Eventually, Warren Buffett bought Apple stock, but he bought it 10 years after I bought it. So eventually and then you read about central banks today buying the NASDAQ today, right? But 5 years ago, central banks wouldn't have bought NASDAQ stock. So maybe they'll get there, but it's going to be a natural adoption cycle with waves of other investors taking the asset position first.
You've also said, Michael, that the Bitcoin reserve holdings could be liquidated at any time, even on any given Saturday, for example.
That's been misinterpreted.
Yeah.
What I mean is that Bitcoin is the best security and the most liquid security invented in the history of the world.
Okay.
There's never been a security, you can't convert dollars into yen on Saturday afternoon. You
Gotcha.
can't sell gold on Saturday afternoon. You can't sell Apple, Amazon, Facebook, or government debt on Saturday afternoon. With Bitcoin, you can get a bid on it in any currency, any hour of the day, 365 days a year, which means you can market to market at all times. We've never, in the history of the world, had a liquid security that you could mark to market everywhere on earth, every minute of the day, no holidays. And that's what makes it an extraordinarily pristine asset.
Michael, I know that folks like, and pundits like Max Kaiser and Raoul Pal very much share your vision and your vision of Bitcoin. And they have very bullish calls on Bitcoin. I mean, Raoul Pal, the last one I saw was, it could go to 1 million. What kind of forecast do you hold?
I believe that the price of Bitcoin and the value of Bitcoin is going to go up as more people adopt it as their treasury reserve asset, as the technical utility increases, as the productivity of all the people that adopt it goes up, they'll sweep their cash flows into it. And then as the inflation rates of all the fiat currencies it trades in increases, and I'm talking about asset inflation rates, like the 10% a year, I'm not talking about CPI inflation rates. Those four drivers are going to drive it up. At what rate? I'm not a trader. I don't really respect traders, to tell you the truth. Like, I'm not in the market to buy it this week, sell it next week, and buy it back the next week. I'm more in the Warren Buffett school of thought, which is You buy it because you expect to hold it
Right.
forever. And it will go up over time. I just don't know at what rate and to what level, except obviously it's extraordinarily valuable.
Now you hold 73% of your company's voting shares, but I still want to know, when you showed up on whatever day that was with your new strategy here, what was the reaction like?
I think, are you speaking about
the company?
Okay, our employees?
Yes.
They're very excited because they think it's a very progressive move. Our company's full of technology lovers, and Bitcoin is digital gold. It's the dematerialization of gold, in the same way that Apple dematerialized your camera and Facebook dematerialized your photos and Google dematerialized your library. It's really cool to be on the edge of the virtual wave where you're doing something that's going to be 1,000,000 times better than what came before it.
And Michael, finally, as the CEO of a huge company, moving into Bitcoin, obviously there's a fear of the value of the US dollar, of what will happen to the currency, what will happen to our economy. How do you see things?
I think that inflation is a vector, and that means that there are some assets like YouTube views and manufacturable goods that are not that are very abundant, and they're not going to inflate very fast. I think that there are going to be scarcer assets that will inflate faster. And I think the pure financial instruments and assets will inflate even faster than that. As we produce more money, I think we'll have a range of inflation rates from 0% to 25%.
Wow.
I think that, for example, bonds have been inflating at 20% a year for a decade. You could have spent $1 million on a bond in 2010 that paid you $50,000 a year in interest. This year, you would pay $10 million for the same bond. It's a 22% inflation rate. I think that we're going to see those sort of products continue to inflate. I think that eventually there'll be consequences and there'll be changes in behavior. How that balances out, it's very complicated. It's unclear, except for the fact you don't want to be holding assets with a negative real yield.
So is inflation, as Alan Greenspan said recently, the greatest threat to the economy right now?
I think so. Bitcoin is an infinitely hard asset, whereas gold can be produced by human beings given enough incentive. I realize that over the long term, Bitcoin is the harder asset than gold.